Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. Good afternoon, ladies and gentlemen. Welcome to Paul's Monday Market Update, number 186 for Monday, 9th of June, 2025. I hope you're well. Hope you've had a good weekend. Hope you're ready for the start of the trading week. As always, if you're here joining us in the live session, it'd be good to know that you can see the slide and you can hear my voice. That would be a good benefit. For those of you joining us for the first time, the Monday Market Update is literally just that. Okay, it is me flying through as much as I can, basically cut through in the next 25 to 30 minutes, looking at strength and weakness within FX markets, looking at a few charts of interest that you might want to add to your watch list, and then I'm going to look at live markets. It is not a trade signal service. It's not trade recommendations. It is just my view of the markets, which may or may not be of help and use to you. As always, you're very welcome here, but just remember that you are always responsible for your own trading decisions. If you want a bit of help and support, okay, in terms you need a bit of accountability to basically cut through your plan and follow it, then you can join the VTP tag, the Trader Accountability Group, the QR code there, or just ping me if you've got any particular questions. If you want some more education this afternoon, then I'll be doing the Monday Market Matters webinar for active trades, 2 o'clock. Join on the QR code or register on the website. And today I'll be talking about trading market structure. And also I do a Wednesday evening Market Pulse weekly update for Admiral Markets. They're just basically doing some analysis of the global financial markets and then also sterling and UK stocks, 7 o'clock every Wednesday evening. You can join us there on either, as I said, the QR code or register on their website. Okay, so I'm going to start a little bit differently today, just because of the interest in the price action. So those of you who are on the VTP stage 2, I do a weekly call every Tuesday, and last Tuesday talked about doing a bit of insight into, in particular, sterling based upon the COT reports. And so this is what people get to see and what we talk about. And let's just bring up the tool, because what I was interested in was that from the previous week, what we had seen on the non-commercial side was that we had seen them basically increase their longs considerably, whilst at the same time basically having the commercials. The commercials also looked to basically go short to effectively hedge against that, at the same time as also the kind of the small positions were increasing their longs as well, as we could see here, the kind of large speculators getting long, the commercials kind of getting short to hedge, and the smaller speculators getting long as well. And I remarked at the time as that was a big number in terms of non-commercials, okay, just actually getting long. So and I was intrigued to see how that was going to play out in the price action. And so just bear that in mind, ladies and gentlemen, for when we look at sterling in a short while. Okay, so that's what we were looking at last Tuesday. Okay, and actually how that helped us last week. On a kind of bigger picture, this is BXY. Okay, the sterling currency index. Okay, and it effectively has been demonstrating a kind of a considerable amount of sterling strength there. And then I took a snip from this morning's STAM, okay, from the STAM plugin, and what we could see is that basically sterling there, okay, was still remains strong. Okay, there's a little bit of a weak start this morning, but basically it still remains very strong on the STAM, along with Kiwi dollar, which we will look at as a little bit later. So just adding a little bit of background to some of that sterling strength we've seen, and it's a sort of a thing, as I said, that we'll kind of cover on a weekly basis for those of you on VTP stage 2. But let's have a look at the STAM itself, okay? So if you're joining us for the first time, basically the STAM is me just looking to identify where's the strength and where's the weakness, primarily in FX and indices and commodities markets, so that I'm in a position to sort of allocate my time, energy, and resources for the week ahead for swing trade. So these are just snips that I take out of it, okay? What is it telling us? What is it showing us? Well, we are into week 24 of the year from 9th of June. Sterling, top of the pile, and has been pretty much top for about most of the last month. Okay, so which has kind of been curious and interesting for us. I mean, we started January kind of pretty poorly, and I was very anti-sterling, but then invariably that has turned around, and you've heard me say it all the time. A lot of that has been basically due to effectively to sort of anti-US, okay, anti-US trade, anti-dollar trade, okay. So sterling has continued to push its way there, as you can see, and remains at the top of the pile, while the dollar remains at the bottom. And we can look at even for like the first sort of 12 to 18 hours of the trading week, we can see that dollar was at the bottom again, and pretty much everybody was strong against the dollar, in particular Kiwi dollar, which we're going to have a look at in a moment as well. So we've got sterling still at the top of the pile, and as we've just looked at there in the kind of previous slides, lots of non-commercials piling into that over the last week or two. As I said, I don't personally think it's a huge, a sort of a slap on the back for the government's performance or the Bank of England. It's more a case of an anti-dollar position, all right, than anything else. That's my view. But we've also had Swiss franc. Okay, it still remains strong. Still remains kind of holding on to that second position. And it's interesting because Japanese yen has kind of weakened itself away. And normally, Swiss franc and Japanese yen, safe haven currencies, risk off currencies, they normally kind of work in unison. Okay, either strong or the weak. But you've got one of them strong, one of them weak at the moment. And we could go into that because there's an awful lot of element of that about Japan and what's going on there. But I'm just looking at what is the STAM telling me. And then picking up a lot of the kind of the rest of the pack, the middle of the pack is the condols. Okay, a bit of a mixed picture. Part of that is because some people want to be risk on, some people want to be risk off. Some of the data out of China over the weekend was a little bit, not exactly exciting. But then I suppose the bigger elephant in the room is that everybody's a little bit hands off at the moment because they are waiting to see what happens. Yeah, China trade talks which are happening in London. Also, Ms. Reeves, the UK Chancellor, she's meeting with the Chinese Vice Premier as well on the Chinese visit. I feel sorry for the Chinese Vice Premier, but there you go and stuff. I'm sure they'll love it. I'm sure they'll have a fine old time. And Euro, kind of has bounced back from a couple of weeks ago, despite the kind of cut in interest rates, the sort of looking at the kind of European situation. There is some strength there in Europe, but as I said, I still consider that more of an anti-dollar play rather than a pro-sterling, pro-euro play myself. But certainly, when I look at the individual currencies, sterling ones, an awful lot of them are in buying. They're in the sort of buying environment, which is not the case with euro. But looking at a lot of those condols have started to get into basically into buying environments. When I look at the indices, commodities, look at that, pretty much all green there, all green, and pretty much most of them in sort of strategic buying, okay, or tactical buying sort of environments there. STAM 1 Bravo, STAM 2 Bravo. There's a wall of green there, a wall of green considering sort of back here, okay, a couple of months ago and stuff at the sort of end of March, start of April with all the liberation, it was very, very different. Very, very different, but it has been a fantastic insight into how shrug off some of the geopolitical and domestic nonsense that we see going on, and and exactly how quick that bounce back has been, and we're going to look at that a bit more in the chart at the moment because despite all the nonsense that's been going on and stuff in terms of like NFP numbers, in terms of Trump and Musk falling out, in terms of sort of domestic rioting in LA, for the moment, the market seem to just basically they seem to be they're walking worry. All right, they're quite happily climbing that wall of worry. So, which we'll look at in a moment. Okay, so let's have a little few look at a few charts of interest. This is of interest because Microsoft, Microsoft on the weekly chart here. Okay, and I'm of interest because really, even though the pre-market has us kind of opening a little bit lower, last week we basically on a weekly, we closed at highs, all right. We closed at new highs there. Okay, and it just kind of comes back to that. Yeah, we made a high middle of last year. We started this year and we dropped away off and dropped beneath that kind of 400 odd. But this, even though all the panic that was happening there, that was you might look at that. There's a bullish key reversal in there, a bullish engulfing candle, double bottom in there, and we've just launched our way back up to those highs. Okay, just above 470, all right, $470. We closed last week. Yep, we're gonna the pre-market is a kind of a bit of a lower, but it's still, as I said, you hear me saying, I'm always intrigued at how do markets react, how does the interest rate, how does the price action react at particular highs and lows like that at certain levels. I'm curious to see how does the price react because I think it can tell you a huge amount. If it holds above that level and bases, well, that to me is a sign of strength and will carry on. But if the price action starts to sort of roll over there, well, then that provides another type of opportunity. So, yeah, kind of curious to, as I say, despite the wall of worry that we're climbing on in terms of, let's say, domestic politics and international geopolitical events, and markets are still, look at those markets. Some of those markets still making new highs. It's quite something to behold. Um, One stock that isn't making new highs is Tesla. All right, okay, and this is probably a representation of the kind of shenanigans that we've seen going on in American politics for most of this year. Of course, Mr. Trump and Mr. Musk have had a little bit of a falling out. Okay, they've had a lovers' tiff over the last few weekends and stuff. And personally, I think it's probably very well choreographed. Probably said that wrong. Choreographed sort of pantomime. It's all right, and certainly we can see last week, okay, that having pushed to those highs on Trump's election, we can see that basically we rolled our way over there as he got stuck into his Dojeway. We'd had a little bit of a bounce as he was saying he was kind of stepping back from it, but you can see the kind of the inaction of them two falling out at the end of last week. I think Thursday, and please correct me if I'm wrong, something like his own personal fortune sort of dipped by about 150 billion, based upon the kind of the severity of the drop from Thursday when it came out about their lovers' tiff. Now, I think what's $150 billion between pals, but we can see that we had a real strong sell-off there. We've dropped beneath $300 there. Okay, this even the pre-market. Okay, is like another what was that? Another $7 or $8 down from there as well. We've kind of very clearly formed basically a lower high there. So my view is, well, basically, I think we drift our way back to that sort of 200 level. If there is no reconciliation between the pair of them, it drifts back down towards about 260 in the 200 period moving average. If they kiss and love up, and they are like have themselves a nice public sort of kissing contest, well then it shoots back up above $300. That's the way I look at that. Okay, so just watch the news and see how it plays, and now you have an opportunity to actually sort of to basically to put your money where your mouth is based upon what those pair are up to. Yes. Okay, so this is one we haven't spoken about for a while, but it's of interest to me. Okay, for various reasons, I've been in it for a while. AutoZone. Okay, so AutoZone, I would describe them as as kind of the America's Halfords, but at a much more geeky technical level. All right, and the reason I say that, and the reason I'm interested in it, is that I think next week I'm on go on an annual cannonball run with my good mates. All right, and they are petrol heads. They really are proper petrol heads. I am not okay. I can appreciate them looking nice, but really fast cars, they're a bit slow and a bit two-dimensional for me. But my mates, they love it, and they've all got their Astons and Porsches and Lotuses, etc., that they pour over. And also pour a lot of money into. And the kind of this became aware to me a couple of years ago when basically interest rates started going up, and they were talking about how effectively um, people were not changing their cars because the interest rates were rising. It meant that they could no longer get great deals on effectively, free money for cars. Okay. And I was reading that lots of people were paying $800 to $1,500 a month for their kind of an astounding sum. And so, because of that, what people were doing was rather than, once they were getting their whatever it is called PCP, the hire purchase, was basically over. People were buying, their old cars and doing them up, or keeping their second cars and doing them up. And so, of course, to do them up, they were spending money in AutoZone. And as you can see, the share price has been in, kind of one-way traffic, all right, for a good few years now, really. So, you can see that from where we're at the bottom left of the chart, about $1,500. We're now up here tickling the soft underbelly, all right, tickling the soft underbelly of 4,000. Okay, just up there about 3,100. You look, some people might say, well, actually, Paul, is that not more of a double top? And I wouldn't fight you, all right. I wouldn't fight you. I will look at that for about 3,400, 3,450. That's why I would be looking. Okay, if you break beneath that, well, then of course, the party's over. But it's just a fantastic example of how the consumer adapts to the changing environment. Okay, as interest rates rose, and either basically car loans became just too expensive. Consumer behaviour has changed, and that's what's happening. And it might well be the same for Alfred's. All right, here for those of you who are petrol heads here, you can let me know and stuff. Maybe you've got a view or an opinion, or you differ. Really, all I'm interested in is that is a great trend, and you hear me say on the VTP stage one, all right. If there's a great trend, good trends leap off the chart at you, and if there is a good trend, you want to fight it. You want to find a way to surf it. That's the nature of the beast. But that is quite some chart, that isn't it? Over the last couple of years, absolute beauty. And then we've got here Oracle. Okay, Oracle, because Oracle they've got earnings on I think it's Wednesday after close. Okay, I'm kind of curious, interested in this. Mainly because I know lots of people who used to work for Oracle. Okay, who basically went into the jobs there and all did very very well for themselves. And then about was it about 2007? I returned to Bosnia and Croatia. I haven't been there in '92. Returned back in the stayed just outside in a village just along from Dubrovnik. And Larry Ellison and his boat was there, and it pretty much took up the entire harbour. It was absolutely huge, and I saw the fella knocking about and stuff and what have you. Fair play to him and stuff. His boat was like a bloody aircraft carrier. But anyway, when you're a multi billionaire, that's what you can do. You can get yourself a big boat and mince around the Adriatic. But anyway, share price and stuff. And so, what we saw was we kind of flipped around $100 here, okay, sort of about 18 months, years ago, okay. We came into base, and then we ran away. And remember what I said, don't fight good trends. And this trend was ended with basically a big bearish engulfing, bearish key reversal. It came back in to test it. It basically couldn't make, it was basically a lower high with another bearish engulfing key reversal. And then we rallied away, fell away there. Okay, fell away pretty strongly to 120 into the kind of the tariff tirade, which was basically ended with a kind of, once again, a bit of a double bottom. Double bottom with a second leg as the bullish engulfing key reversal and push. We're back up above the 20, above the 50. And now we're looking at about 170. That's been quite some recovery. Maybe not as strong as Microsoft and others, but I'll be intrigued to see, do those numbers on Wednesday after close, does that actually drive it higher, or does it take the wind out of the sails? Okay, so realistically, if it's going to push it higher, I'll be looking for it to get above 180. If it takes the wind out of sails, then I think it falls back to the 50 at around about $160. So you might want to watch and see how that plays out over the rest of the week. Right, I think that's all I put in. Yeah, that's all I put in there and stuff. So let's switch across to the live markets and have a look at what's going on there. So just bear with me for a moment, and we'll switch across to the charts. Okay, so I'm hoping you can still hear me. I'm hoping now you can see our platform, indices platform here. Okay, down on the weekly, NASDAQ on the weekly, SP 500 on the weekly, Russell on the weekly, FTSE 100 on the weekly, Nikkei, DAX, oil there on the daily and stuff. But kind of why don't we just have a quick look at oil? It is just basically as a waste update, $60 still acting as a support. We had a bit of a push up there, okay, but 60 is acting as a support. For those of you who love a pattern, all right, I would look at that as perhaps being an inverse head and shoulders there. Can you see that? Basically, looking at that, I could have drawn that better. Could have drawn the neckline better, but you get the impression there, okay? Is that basically an inverse head and shoulders that's just starting to build and work its way up? Because if it is, well, then I'd be looking at it towards the 50, around about $69 as a kind of natural target for me. So, whilst with that. All right, let's have a little look at the indexes. As I said, Dow weekly chart. Okay, we're sat above the 50 there. Okay, Nasdaq is probably just a little bit more kind of bullish. S&P is starting to get bullish as well. Even the Russell is it looks like it's breaking out of that block, but it's beneath the 50 there. As I said, I think what we're waiting for is we're waiting to see what kind of goes on at those US-China trade talks. That will be the big thing for this week. Okay, there's not as much data coming out this week. I mean, there is some CPI and PPI data. Okay, and the jobs reports from Friday were great, but they were not as bad as some people had been expecting. Okay, so I think everyone will be waiting to see what happens, all right, from that US-China trade talks. Okay, if they're good, well, then expect risk on rally. If they're poor, then expect us to basically certainly in the kind of the Dow and the S&P, I'll be expecting a little bit of a drop back towards the 50. That's what I'll be working on. Closer to home, all right. If you look at DAX, we've talked about this. DAX weekly got above the highs of the year, and the price action might not necessarily be the most beautiful, but listen, it's holding above its highs on the weekly chart. Okay, the daily chart, it's that to me is that it's grinding. I was looking at here, okay, the start of last week and stuff about how a couple of nice pinballs off the highs, off the 20, okay, and it's just worked its way there. Okay, it's just grinding its way up. This is grinding its grinding up the wall of worry. It's still continued to move higher. Look at FTSE. We've talked about this, FTSE, has not come back anywhere near as hard and fast as the DAX or its American cousins, but it continues to grind its way higher. Even though sterling has been strengthening, it has effectively just been grinding its way higher. That daily chart, if we look at it here, okay, from all of the panic and pandemonium here with the bullish engulfing, once we got above that daily 200, we've just around our way. Only the price is above the 20, it's above the 50, it's above the 200. It's just working its way higher. Okay, it might not necessarily be exciting, but you've got to think that are we now going to go for are we now going to basically run for those highs? That's what we've got to really work our way towards, pushing towards those highs and testing them again. That's what I'd be looking at. Let's have a look. We looked last week. Last week we had a look at Bitcoin, didn't we? Bitcoin on the weekly chart. Okay, look at that. Where we trading this morning? About 108. We talked about how basically last week. Maybe even easier on the daily chart. I talked about last week how we'd run into the highs, and what I expected. The reason I talked about it was to see if 100 becomes the new base. Okay, the new line in the sand. I said last week I thought we'd come back and test it, which we did. We came down and tested it beautifully. Hit this kind of cross between 100,000 and 50 and have bounced off it. If I go down to the 4-hour chart, I was just looking at it here on the 4-hour chart. Basically, it was coiling up there between the 200 and the 50, and we dropped and we just bounced our way off it. And and there's been a really strong bounce there, hasn't it? The way that has played out. So that is effectively doing that. Has it benefited from dollar weakness? Yes, but there you go. That's the name of the game, isn't it? I'm talking about benefiting from dollar weakness. Well, we had gold kind of pushing its way out also of this sort of this flag pattern. And it started off in the daily chart, started off nicely, but we'll kind of come back to test that trend line, test the 20. As I said, gold, I think, it is that US-China trade talks. If it's really, really good, then I think actually gold drops. If there is no agreement, I think gold rises. I think that's the place we play at the moment. But while gold has maybe flattered to deceive in the last week, the same can't be said about silver. Okay, silver. Here we are on the weekly chart. We talked about how we just really dropped off strongly, but quickly returned back above 30, back above the 50, back above the 20, and we were just coiling up there. We drew in another little bit of trend line there, counter trend line. We've broken it, came back and kissed it. But even I wasn't expecting this kind of punch that we got through last week. Really strong, a punch through highs and closing at highs as well. If we go down to the daily chart, you can see we just sat above that trend line and above the 20 and the 50 came in. A couple of really nice inside bar price action combos and bash off we went. And so as I said, when price is in a very clear uptrend, don't fight it. Find a way to surf it. So some of them have done very well out of the sort of the pains of the US dollar. So let's take a look at how the dollar and the majors doing, and then we'll have a look at Kiwi dollar and we'll have a look at sterling. We might overrun a little bit, but that's just because I wanted to do a little bit more on the sterling based upon how the price action for sterling was last week and such. So come on, let's update it. My internet has been quite slow today, but here we go. So here we go. This is my dollar profile here. Let's just bring this up. Dollar profile. Aussie dollar, Euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen. They're all on the daily charts there, okay? But let's have a little look at the sort of dollar index. So dollar index on the weekly chart, and these down clearly. Yeah, we've come up here and we've come back down to this 90. I was saying, but we're in a 98.50 to 100 zone there, and yeah, here we go. If we go down to the daily, remember I've talked about inverse head and shoulders, pop to the 50, come back down and test the 100. Broken the 100. We've not really been able to close back up about the 100. Now, once again, I'd say, we're sat. We did a little test there, was on Thursday and stuff, okay, of that kind of 98.50 area. But it didn't close beneath it. All right, as I said, once again, you might look at those last few days been a little bit quiet, even though we were last week we had a lot of data coming out. I think really this kind of US-China talks there, that's what's going to set the tone, all right? That's what set the tone. So, even though you might be looking at the formal economic data, the very nature of the beast is that, you've got to keep an eye on the kind of the news wires just to basically understand, what both the US and the Chinese are saying about the second round of talks. And undoubtedly, STAM and Reeves are going to want to stick their oar in and sort of claim some sort of glory if it goes their way and stuff. So I'm just going to have to watch this because I think that this will have a huge impact on dollar index. That kind of weakness in dollar has just basically, it's just been confirmed, right? Aussie dollar, all right, that's Aussie strength, dollar weakness. Kiwi dollar, that is Kiwi dollar strength, dollar weakness. Even euro, okay, euro strength, dollar weakness. Dollar against CAD going down, that's CAD strength, dollar weakness. Pound against dollar working its way up, pound strength, dollar weakness. Okay, dollar against yen, it's probably a little bit there, but then they are both at the bottom of the STAM. Yen $7.08. Dollar Swiss has been working its way, but even that maybe that's basically something telling us there. So, but for the most part, most of those risk-on currencies have been strengthening against the dollar, right? And that's, as I think I said last week, that's probably giving you a hint of what the market wants to do. And should there be good US-China trade talks, I'd say that will continue. All right, let's quickly have a quick look at Kiwi dollar and then we'll look, as always, we'll end on sterling. So, here we go. This is a Kiwi profile. Kiwi against US dollar, we've just talked about. Kiwi has been strengthening there, okay? Kiwi against Japanese yen. Kiwi has been strengthening against the Japanese yen. Euro against Kiwi. When your euro has been, top of the STAM or near the top of the STAM, is weakened against the Kiwi dollar. Aussie, which has been pretty weak anyway, has still continued to weaken against the Kiwi dollar. Kiwi dollar CAD, that is just, that's just a range-bound trader's delight, okay? even over the last couple of weeks, pound against dollar, even though pound has been strong, is weakened against the dollar. Dollar Swiss franc has not been terribly pretty there, okay. But once again, okay, there has been, you can see they're pretty in some indicative of, Kiwi dollar strength, despite them basically cutting interest rates. A little bit, what's the right word? Not confusing is not the right word, but a little bit, not giving real clarity. Okay, one day you get good data out of China, next day you get, disappointing data out of China. But it hasn't seemed to have stopped the Kiwi dollar. All right, Kiwi dollar seems to be strengthening quite nicely, so you might want to just watch to see how that particularly plays out. And then let's finish with dollar. Sorry, not dollar. Let's finish with sterling. All right, we always finish with the sterling on here. So, excuse me. What's that telling us? Okay, as I said, we had a bit of a look at the top report. Okay, the data that's been coming in there about sterling, and looked at how that's played out. Cable. Well, we talked about the weakness in dollar and how that has basically benefited sterling for the last couple of months. And we have talked about this kind of this bull flag, and we're working our way and holding we're holding our way up there. Okay, just working our way up. But as I said, it's more to do with dollar weakness than sterling strength. I would put that down. Pound against Japanese yen, okay, is kind of been intriguing me, because on the weekly chart I was looking at these kind of sort of two big pinballs at the 50, okay, and this kind of trend line, but we're back up against it. That's yen weakness, sterling strength, bit of risk on there, okay. Talking about frustrating me, pound against Swiss franc. Here's the daily chart. When the start of Liberation Day, bang, Swiss franc strengthened massively. All right, that's telling you about risk off. But then as we got tariff fatigue and relief rally, we pushed our way up. And then what I was talking about here was that if you just look at that pound against Swiss franc, which has been 1v2 on the STAM, and I don't really trade 1v2, but I keep reiterating that this is in many ways, this is a risk barometer for me. Good news and risk is on, I expect pound Swiss to rally. If we get bad news and risk is off, I expect pound Swiss to drop, and that's what I'm doing. And you can see it's just coiling up there, isn't it? Just absolutely coiling up, getting ready for a catalyst to give it something to basically pump out of that particular range. Let's finish with euro against sterling. Okay, we talked about how euro still in the weekly chart. We dropped back to the 50. We put in a really nice bullish pin bar last week. Yeah, we did. We did push hard, but we didn't follow through on the daily chart. The daily chart, as I said, we'd had this really lovely, bullish key reversal, engulfing candle off the 200, and we worked our way up high, but it's just really, once again, I just see that as coiling up above 84. All right, price, looking into the 4-hour chart, price is just, to me, I just look at that as bang, okay, I just see that for myself as basically price is just coiling up, all right, just above 84. And so I'm looking, right, well, what is going to be the catalyst that basically pumps that out, all right? Maybe Reeves pulls something out of the bag with the Chinese, or perhaps Mertz does. Who knows? Okay, it could be an interesting week. All right, let us draw it to a close there, ladies and gentlemen. All right, I appreciate that, we fly through on this session, it's because I'm trying to just share with you as much as I possibly can in like 25, 30 minutes. I hope you found that useful. I hope that's given you a little bit of help and a little bit of insight that you can take forward into your own trading. I hope you all have a fabulous trading week. All right, it's going to be an interesting one. I think, as I said, they're all based on that those talks. So make sure that you're on top of the news flow and your risk management during this week. Have a fabulous trading week, everybody, and I look forward to speaking to you soon. Take care, everybody. Trade well. Cheers.